This video is to show and explain why the economy of the United Kingdom has been declining, the reasons for the decline. So here we go. The picture isn't glossy as our politicians tell us. They are lying to us and distorting truth. Ever since the Industrial Revolution, the UK has had lots of industry, being about 55 or more % of the economy in the 1960s. That meant that these industries had skilled jobs, semi-skilled jobs. It also meant that there was feeder industries to that again gave more skilled and important jobs. But these have all gone. Why have they gone, and what is the impact on the economy? The last statement here, the UK has declined for decades, is spot on accurate. To see the figures in that relate to that and show you the message, which is grim, have a look at this other video. It lasts 42 minutes, and if you search Google for the exact words Global Britain, the case against Global Britain, you will see this 42-minute video, which gives all the details in figures and graphs of the decline. The rest of this talk is to show why did that happen, what were the factors that actually made that decline happen. Basically, very poor economic performance and also political incompetence. The text here is self-explanatory. Something's happened to make the growth of the UK slower, way behind our competitors. So as time goes on, for every hour we work, our competitors in 20 minutes or 50 minutes can produce the same amount of product and the same amount of wealth. That's what poor economic performance means. It means lack of research and development. It means where's the money gone? It's gone somewhere else. Since the bank crash of 2008, literally, accurately, the productivity and output per person in the United Kingdom has been literally level. Instead of going up at inflation or slightly above inflation to keep the economy where it is. But as it says here in simple terms, if you don't produce more, at the end of the day you can't pay more. So, has the business class stopped spending money on investing in machinery and technology? The answer is no. But the trouble they have is in the UK economy, ever since then and still today, there's other changes happened that still affect this, but primarily the situation is this. I'll give you an example. In 1950, a company called Allied Lines plc that made wine, beer, sherry, coffee, built a computer called Leo, Lions Electronic Office. It ran their stock, it had 2K of memory and filled the floor. So they went along to banks and investment houses and they said, we used the technology from the world's first computer Colossus, built to break the German military code during the Second World War, and we've got this and we've got it working commercially, and we want to sell this worldwide. We're ahead of the game here. We can actually make money. Long term. They didn't get any money. They failed. It was sold to the rights for this was sold to International Business Machines, who for the next 50 years were the world leader in mainframe computer technology, and even today they still are up there among the main producers. So the money that IBM could have produced here, or Leo Lions could have produced here, could have all gone here. Jobs, high technology, money for the government, increased taxes, but it went. There are 64 countries in the OECD. In 2022, the UK was the lowest performing country in the whole OECD. Just above us in this list was Russia. Russia's at war. It's got sanctions against it, and it's not performing very well. And yet we, the United Kingdom, once a huge world manufacturing and wealthy country, has lost it all. Since the Industrial Revolution, the UK has kept its wealth within itself, all of it, apart from a percentage that allowed the empire to grow and later on remnants of empire. Today we have very little empire, and the financial markets and the global markets have totally changed. But still, government policies within the UK has not meant that people in the UK, businesses that have money, banks that wish to invest, put their money here. So in 2019, the UK had £11 trillion of UK money invested abroad. That money goes to industry abroad, jobs abroad, profits abroad, none of that here. Roughly 10% or so of the money in 2019 that the UK invested stayed in the UK. So why and where has it gone? There are several reasons, but one of them is property. The UK since the 80s has been going on about property. This is partly due to government and the policies of Margaret Thatcher's government that wanted everybody to buy their own house. And then the banks changed and the banks became mortgage lenders, so the banks focused on property. The ruling elite, due to the structures, and this goes back centuries, have been risk averse, and they've actually been slow at investing abroad. This is indicative because that's where the power of the country, that's where Westminster, the whole structure is inward looking. Very few people nowadays within Westminster have true life experiences, working experiences. This woman, her government for the years shown there, has done more destruction and devastation to the United Kingdom's economic base than any other period in the last 100 years. If you look at my other video mentioned at the beginning of this talk and look at the figures at various stages, you'll see what this actually did and what actually happened. But she came to power, and she decided that one of the things she wanted to do was smash the power of the trade unions. This went back to 1974, that following a period of power cuts and 3-day working weeks in the early 1970s, the Heath government, which was Conservative, got kicked out of power in 1974 and lost an election due to the power of the union movement. So she set out to destroy them. Unfortunately, her plans had a side effect, not just with the unions but her economic policies, to pay for all this. I'll give an example on this later on in the talk. What she did was she turned the economy from primarily a manufacturing economy in a 12-year period to a service economy, and also there was a start of financial services at that time, due to changes in government control of banks and also computing. But a service economy, if there's a down period and people are worried, like today with the energy crisis and high energy costs at people's homes and so on, and in businesses, they keep their money and they don't spend it. In a service economy, if people don't spend money, the government loses tax income. If the government loses tax income, they can't pay benefits and decent pensions. This transition from a manufacturing economy to a service and financial services economy was paid for by money from the Scottish oil and gas fields, which were discovered in the 1970s and heavily exploited in the 1980s and 1990s. As a result of this programme, the unions did lose power, especially as most manufacturing industries went where some of their power base was. So now, today, 2023, you've really only got strong public unions in the public sector and in transport. The killing move that destroyed manufacturing in the country was actually privatisation of huge industries. I'm not saying that huge industries should always be monopolies run by the state, but at that time in this country, that was the situation. When they moved to privatisation, they thought what they needed to do was put regulators in control, and there were things like Ofcom, of what, of this and of that. But they had no real power, no real control, and no clout, so they didn't do the job. They couldn't. They had no power legally. All the price increases today, lots of them are due to the fact that the UK economy has lost control of its assets. The UK government doesn't have the control to manage things. At the moment in the country, energy costs are high. Let me give you an example. When electricity generation was publicly owned by the Central Electricity Generating Board, the generating board had 30% spare manufacturing capacity. Today, we can hardly manage, and the government's paying people to cut the lights off at certain times because the private industries haven't invested in new plant and new machinery, because that's not good for shareholders. Likewise, in England, we have lots of wastewater going into rivers and so on. Why is that? Because when they privatised the water facilities, the private companies, once again for shareholders, did not invest. Because they did not invest and the population's gone up, the infrastructures have gone up, they haven't got the money and the capacity to treat this extra sewage and effluent. And in water supply, did you know in England that there hasn't been one reservoir built since 1972? So here's an example about the loss of a public industry and the subsequent loss of all industries related to it. And this type of example happened in all public sector changes at the time. Ravenscraig, near Motherwell in Scotland, and its nearby steel pressing mill at Gartscosh was built in 1954, one of many steelworks in the whole country. It closed in 1992, although the closure plan started in 1980, and it only kept going because of action to keep it going and fighting. But in the end, it no longer exists. What happened with the closure of Scottish Steel? It pulled the economy away from the entire industry. What actually happened was, suddenly Scottish Steel wasn't there. Suddenly the demand for steel in the UK couldn't be met from UK steel producers. So what happened is that they had to go somewhere else. And what actually happened was the industries here that couldn't get it from British steel companies went abroad. But these companies abroad didn't just come and sell this widget, this beam, this H-beam that they can no longer be produced from Gartcosh Steelworks in Scotland. So what they did was they went abroad to get it, to hit the mismatch. And then what happened is these companies came in, but they didn't just sell the wheels of the car, they sold the body, the doors, everything. So that within the steel industry, it started to decline. And this thing happened in all industries in the UK. So much so when the big industries went, the small industries in the UK could no longer have a bigger customer base. So some were quick and they sold abroad, but many went under. Things went to the service industry. So what the UK government did was, with their policies with steel and everything else, textiles and so on, is they allowed it by doing nothing and not really understanding the market, not really understanding what was going on. A bit like Brexit really, they hadn't got a clue, they lived on a dream. This infiltration of the market with steel, as I keep emphasising, happened in every manufacturing industry in Britain, and it was caused by government policy. The final slide on steel. What this actual slide shows is that the UK ranking here was about 5th in the world with regards to total steel manufacturing capacity over these years. And you can see that the economy started to decline in the 70s. And it kept declining, so steel production kept declining. And then the Thatcher government time they did things and shut the steelworks down. And then it caught up and things, at this point here the UK manufacturers that were left had to go abroad. So the steel production declined because they were buying it abroad and getting better deals. And then things kept going up to here and we were losing it. If you look at the other countries demonstrated here, they basically kept level. They kept their stuff and they did it because their business and their government were focused on it and they gave support and the government understood. If you look at this graph here and you kept it going to 23, what you would see that in 23 there was only one steelworks left in the whole UK. There used to be quite a few. It's run by China and it's not doing well because it's not really big enough to compete. So at the moment as I speak, there's members of the UK government out in China begging for China to put money into here to keep a few British jobs going. It's political now, but they're going to lose it. This is what happens when you lose an industry in a given area. It's self-explanatory. If you lose a big industry, all the feeder industries disappear as well. The hit is quite bad. In the past, prior to the current situation, companies ran along, and if a part of the business started not to do well, they'd look at solutions, try to turn it around. Okay, some got closed down, but the mindset was, let's keep our company going, growing. Let's look at the product ranges, see if we need to change the mix, look at the customer base and find out what to do. As well as the UK government changing things and the banks, which I'll come on to in a minute, changing things, there was a different philosophy. Accountants gained control in the 1980s. And basically they broke things down. So the mindset of keeping the company going and look at the mix and do it still happens obviously, but in many industries they actually decided to close bits down. When you start to close things down, you lose things, you lose profitability sometimes across the whole company. Suddenly a good product mix for your customer base, when you look at one factory and you close it down, or one product line and you close it down, it can sometimes alter the mix. And that mix means that you lose customers because they go somewhere else. You lose profit and you decline. I gave examples earlier about maximising profit with the water industry in England and Wales, where the sewage system can't cope. They haven't built reservoirs. They've lost the art of planning ahead and investing in this country. Whereas the money go, why are they doing this? This is a startling revelation. And nobody went to prison, by the way. Many steelworks around the world are privatised and run, but it's how you do it. and it's a model. Their thinking was so naive and stupid, they allowed Britain to decline in this example. But the end result was there was nowhere to invest, so people with money looked elsewhere. I mentioned this earlier on a slide, and it's very critical, so I've showed it here. The money has gone. I emphasise the money in the UK, a lot of it is getting invested in other companies, their profits, their wealth, their growth, their social services, and it's declining here. During this time of change and strikes that related to it, the government blamed the workers for the trouble, and they were causing a lot of problems, but in actual fact it was the government causing it. These countries and many others invested heavily here. I'll give you another example. To try and get jobs here in the 1980s and 90s, an American company called Motorola came to Scotland. They employed about 4,000 people for roughly 10 years, just off the M8. They were given no rates to pay. They were given benefits in millions to come here. As soon as those benefits dropped and those benefits stopped, they moved abroad, in this case to Czech Republic, and they closed Scotland. This is government lack of control that allowed this to happen. They didn't put procedures in place to make a company stay. An example is, people say, well, we can't afford to build ships anymore. Now Norway, as many of you will know, especially in the last 30 or 40 years because of oil, is a very high-paid, highly technological, very wealthy society. So how come Norway is one of the world's largest shipbuilding industries? How can they do it with high wages and high demand? What they did was, their government and their banks and their private investors invested in the latest state-of-art yards, the latest build undercover stuff, the latest automation. They went for it and they built ships. Turkey did the same, Poland did the same, Britain did nothing. It's called lack of investment, lack of future, lack of control, poor government. I've just been saying money left the country, but obviously it's not all gone because we still function. Here's a very recent example with the PPE. I'm pretty sure 30 or 40 years ago that the PPE could all be manufactured in the UK. In fact, there's lots of other political issues here about PPE which I won't go into, but in Scotland 3 companies came together and they produced all the PPE for Scotland and some of England. So it could have been done in, but they didn't do it. The government allowed businesses to actually, that never sold PPE or manufactured before, to suddenly create these things and get all these contracts without due diligence. Bad government, bad audit, bad control, broken procedures. But the money was available to do this. How is it being matched? Why did that happen? In these cases and many others, we paid the bill, it was manufactured mainly overseas, the profits went there, and that was it. We gained nothing from the need to produce all this PPE other than the 3 companies in Scotland that met Scotland's needs. This slide here, this picture you see, was created on information from 2018. It shows that roughly 80% of the economy was now services when it used to be 60% manufacturing. But it also shows that 40% of the UK exports to the EU were in services. The UK's total exports, including manufacturing to the EU at that time, was 54%. That tells you how much we lost manufacturing. However, talking about service industries, Brexit caused this. It caused this because suddenly barriers were there and the EU treated us as a third country. What that means is if you wanted to sell services into, say, Slovakia, the company now, instead of your qualifications and quality controls and everything being recognised automatically across the EU, your people and rules, you had to go to that country as if you were a third country and apply to have your individual people's qualifications and standards recognised before you could sell your services there. And that happened with every country in Europe. Suddenly, we couldn't. So, although I couldn't find information of up-to-date figures, I can guarantee that our sales of services to the rest of Europe has declined because every business in the UK that wants to do this has to comply the rules with every single country in Europe. That's self-evident. If you look at the other video that I mentioned at the beginning again, you'll see all the breakfast figures and you'll see what's happening. What's happened is we've lost manufacturing. We have less to sell abroad. That's been made worse by Brexit because it's more difficult to sell abroad. So what's actually happening is, as we make less, we have to import more because we are making less. We have less to sell. Therefore, you're making a loss in the economy as the amount of money you're spending to buy in is increasing and the amount of money you're getting is decreasing because you're not making things. In the past, up until the 80s, the example I gave a long time ago in this talk with Leo, banks stopped lending in the traditional way to businesses. A business used to go in to see the local branch manager, have a chat. The manager knew you had to do a risk assessment and all the stuff about your business, but the bank would speculate and help you to grow. Not as much as other C's companies did, but it did. But suddenly the banks changed. They went into mortgages and less working capital. So banks are now tied a lot to property, less to helping businesses grow. Not saying that doesn't happen, but it's a smaller part of their business. The situation in 23 and in 22 is this here at the bottom, and that's why part of our energy cost crisis in the UK is because we're having to buy energy in dollars, but our economy is poor, therefore the pound relative to the dollar is poor, therefore inflation goes up. It used to be that managers and banks invested, as I said just now, in businesses, but then it changed, and it changed globally, a global market which caused a 2008 crash caused by poor government regulation. They gamble. So in the UK in particular, more so than many European countries, we use risk to fund companies. So we don't get money from banks that we pay back at a certain interest. A lot of these businesses, hedge funds and so on, hedge and gamble on movements and interest rates to fund things in business. How dodgy is that? And it was this concern that caused the crash with Prime Minister Truss when she didn't use proper procedures with checking her budget before she mouthed it off. And everybody in the investment side, in the hedge funds and so on, who work on theories and gamble, panicked. And you and me, the taxpayer, suddenly had another £40 billion to find over the next 30 or 40 years. So, summary. We've been declining since the 70s. Our wealth creation abilities have dropped dramatically, caused by government policies mainly in the 80s, 90s and so on. Our politicians, if you listen to them in the last 20 years, haven't got a clue what to do. They talk about pennies here on tax, pennies there off on tax, but they're not actually doing anything to create wealth. Most of the UK economy goes overseas. It isn't invested here. The Labour and Conservative governments since the 1980s have destroyed manufacturing. And yet, when there's something going on, you see the politicians on their 2-minute video on the news walking around a manufacturing facility. The trouble is they've got less choice now. Brexit is a catastrophic negative effect on UK PLC. Since 2022, figures are now coming out because the COVID costs can be separated, and it's not showing a good picture. And yet our politicians who know they made a mistake still preach Brexit. The Labour Party, who sat on the fence during the Brexit debate, are now preaching Brexit. They are stupid. They are damaging things for us all. Banks don't support wealth creation either. They work on a different market now worldwide. Savings banks that used to exist locally no longer exist to help small businesses grow, develop the economy, find the next Microsoft. A final example of where government has lost things. Many people know that during the 70s, when the UK got oil and gas, Norway also got oil and gas, roughly the same size as the UK. In 1970, Norway was a relatively poor country economically. Now they have a wealth fund that is well over $2 trillion for the 5 million people that live in Norway. At that time, the UK government didn't think about it, they didn't do it properly, and the oil companies ripped us off. And the amount of money, although it was significant, that the UK government got from oil and gas, because of they did it poorly and the agreements were poor, they will never ever get the money and the wealth of Norway. It's happening again. Over the last 2 decades, more and more money is going into renewable energy and offshore wind turbines and so on. In 2022 to 23, agreement was made by the UK government to put a huge offshore wind turbine electricity producing company off the coast of Fife and Angus in Scotland. This is truly huge and will come into production in 2026. All the manufacturing is done abroad. The installation is done by foreign companies. The actual putting it together is getting done temporarily at a yard in Hull with mainly foreign workers. There will be some British workers running it once it's up and operational, but basically the UK government wants the electricity, but it's doing it in such a way, just like they did with oil, where all the money, all the investment, all the technology, all the manufacturing is done abroad. What they could have done 20 years ago, they could have taken a thought and said, we'll do it here, and funded the long-term building and support of turbine manufacturing in the UK. They could have done this and sold it to the world instead of them selling to us. And if they'd rented the sea out properly and done things properly, we could have been really wealthy. Renewable energy could have been the UK's wealth fund, as in Norway with oil, but we couldn't do it. Our government had no vision, no knowledge, no expertise. Regrettably, that's where we are. The effect of all this collapse is caused poverty levels to increase. There were very high poverty levels historically in the UK, but around the 1940s onwards, poverty levels dropped. People lived longer and so on, because things were getting better. However, since the 80s and 90s and the decline, things are actually declining now. Poverty rates are going up. Homelessness is going up. This is caused by the government. You can see here a graph by the Rowntree's Foundation. It shows the poverty levels in each area of the UK. You can see that London, Wales and so on are poor. Scotland, relatively speaking, and Northern Ireland has the lowest poverty rates. in the Roundtree report that this graph was taken from. If you Google it, you'll find it. This is one of the many things they said that mean Scotland is better at looking after its people. Not as good as we should be, because Scotland doesn't have the full powers of an independent country, but nevertheless within its fixed budget from Westminster it is doing well. Scotland has given a positive budget surplus to the UK Treasury since records began in the late 1890s. In 1921 they stopped publicly showing those figures because at the time they thought that Scotland might get a bit stroppy because that was when Ireland went independent, and they were worried that Scotland would want to be independent because at that time there was a lot of talk about Home Rule. Although things are, I say, thriving here, relative to our competitor countries, we are not doing nearly as well, and we are not performing as well as most countries in Europe. However, within the UK, Scotland is doing well compared to the other parts of the UK. This last statement is one of the reasons why many people in Scotland would like independence. Yes, we can. Yes, we must. We must remove ourselves from a government and a structure within the UK that hasn't got a clue. Let's gain our independence and regain our pride. Thank you very much for listening.